on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Sorry I could not make a video yesterday, guys, but you know what? Actually, I think it was better because we allowed the weekly close to happen, plus we got to see how the markets were reacting on Monday. And as you can see right here, unfortunately, I do wish that I had some better news, but it's not really great to see that we got rejected by the 200 weekly moving average. You could see we did have that break above it. It was looking really exciting. We thought that we were finally going to have that weekly close. We completely got rejected underneath it. And look at that. I mean, you can't deny that was a very specific rejection at that 200 weekly moving average. So, okay, so now that we got a bad weekly close, what does that mean specifically for Bitcoin? Well, I want to go into this and talk about whether or not this was just a fake out, or if the bigger players, the whales, are actually just playing with the retail emotions right now, like, oh no, it got rejected, and we're actually still setting up for a big move. Now, don't forget, guys, this is a very big week for the US. Tomorrow, we have the FOMC, right? They're meeting. They're going to probably raise 75 basis points. If they do 100, that could potentially hit markets a little bit, not too great. Plus, on Thursday, we have the GDP numbers coming out, the report, and obviously, two negative essential reports basically means we're in a recession. But talking about the recession, I need to specifically mention what the government just did. Yes, so this came out officially from the White House, and my mind is blown, although I probably should have believed that they would have done something like this. They're clearly trying to trick everyone right now, and I'm going to let you know exactly why this is completely bonkers. We're going to talk about the double whammy that's going on right now, and finally, we're going to end on the fact that we've also seen stocks, stocks are obviously hitting a resistance as well, including that Bitcoin is falling, but there is one particular spark that could ignite the flame specifically for Bitcoin. So lots of stuff to go over today. I think you guys know it's going to be a jam-packed video. Going to try to keep it down a little bit, short and sweet. Will I be able to pull it off? I don't know, but we shall try. So if you're not subscribed, definitely consider it. Let's jump into the charts first. I want to talk about that, and then I want to get into what the Fed is doing right now. And I also want to talk about what happened in yesterday's video because, or the video from 2 days ago, because something that we had pointed out, well, you'll see. It looks like it's actually happening. So here we actually obviously have our, unfortunate rejection off of the 200 weekly moving average. But I just want to point this out. If we do have a look at this downward sloping channel, this really wasn't much of a surprise. Look at the resistance here, resistance here, resistance here, and resistance right here. And if you guys remember from my video a few days ago, some people kind of got, they were getting mad at me like, oh, you're flipping bearish now because remember I told you I closed out my trade. Well, guys, we were hitting this resistance here, and remember the other chart that I showed you, we had support getting flipped resistance as well. So what can we possibly expect right here? Well, look at the next level. Down here, you could see right around $19,813 is potentially where we could have that next support. Now, I saw a lot of people saying, oh, if we lose 22,000, if we lose this right here, then, it's game over and we're going all the way back down to 16,000. No, I don't think so right away, because look at this, guys. We do have an upward sloping trend right here. Do you see this? Look, we keep putting in a higher low, higher low. Pi cycle bottom indicator got called on this level, right? And look, so potentially we could come down here and put a higher low. And if we did have a fake out, the fake out would basically just wick down below this, come to around $19,813. And then I do believe we would head up here to retest the top of this again, and we would head back towards $25,000. Now, if we don't do that, then yes, it would get terrible. But I don't think that not holding 22,000 was the make or break of this moment. Because look, remember this fractal that we've been looking at right here? So I basically took this and I put it right here, right? Essentially, that's what I did. Now, you can see right here where we had the downward sloping resistance and the support. This is why I closed out my long right here, because we were hitting those multiple resistances. But look what happens if the fractal does play out the same exact way that it's been playing out. So we're right here, right? So essentially, we would come back down, potentially retesting, maybe even 18,000, put in that giant double bottom, right? And then continue to the upside, where then the next level is this major trend. But like I said, we may not even get out to this level until October or November. So I'm not that worried about that right now. What's happening right now is there is still this consolidation right here. And I do personally believe that even if Bitcoin does take a quick trip back down to 18, this is still amazing opportunity for accumulation. And having a look over here, we are sitting perfectly on the heart line right here, you could see of this upwards sloping. Actually, what it is really is more of a, if you consider this to be a fake out, which technically it's not really a fake out. I guess it's kind of a fake out breakout in a way. But really, you're still putting in higher, higher lows. And yeah, okay, if you want to call this a fake out, then look at this. You still have an ascending triangle, right? It's putting in an ascending triangle. We keep hitting resistance right here at around 22,000, which is why everyone said it was such a, severe area. But then we're also putting in this upward sloping trend. So there's a possibility that we do bounce here. Let's see what happens with the news. If we don't, then down here, right around basically that 20,000 to 19. I would say 19,600 would probably be my low for that point right there. That would be an excellent opportunity for us to start putting in the next trade. Now, if you are using extremely low leverage, like 2 or 3x or something like that, you could start building a position right now. But if you really wanted to wait for that better opportunity, I would wait until it comes down here. Now, it may not do that, but if you're building small positions here, then you can average out in the middle right there, right? And if you guys obviously want to learn how to do that, check out the tutorial popping up above. I have actually over $15,000 in bonuses right now, where if you use the link below, they're actually going to give you guys even more money. We now have $6,888 worth of bonuses if you want. Make sure you take advantage of that. And if you guys already signed up, you can technically sign up again. I mean, you could use a different email. Just make sure you use that link below. You can get more than the $4,000 bonuses, right? And actually, I'm going to be putting out a video probably tomorrow or the day after. If you guys want to learn how to trade over here, I'll go over everything from beginner to expert, spot trading, paper trading, leverage trading, which I obviously don't recommend for beginners, but we're going to go over everything. That video should be coming out a little bit soon, but I digress. Side note, getting back to Bitcoin, what do we need to do? Well, we have only a few days left of this month. It's not looking too good that we got rejected off the weekly, but the big level is right here, guys. This green line, as you guys can see, has often provided that support for the bottom, and that is the 50 moving average on the monthly, the simple moving average. And you can see right down here, we had that support. Right here, we had that support. Right here, we fell through it, but that marked the absolute bottom, and the next week, we bounced above it. Currently, we did fall below it. Now, keep in mind, these are monthly candles, so it takes an entire month for this candle to become another candle. And only from this point, where we are right now, Bitcoin only has to move up 4.36%. So if we can close this month, even despite the bad weekly close, above $21,576, close the end of this month above that, then I think we have put in the bottom, and I think that this pi cycle indicator right here pulls through again. And then I will say that things are going to be looking a lot better. Now, we talked about this parabolic curve for the dollar, the DXY, and I was saying that if we broke out of this parabolic curve, if we broke down, right, that would signal it was going to be really good for Bitcoin and commodities. Well, look at what we did, guys. We actually wicked below it, faked out, and bounced up anyway, and now we're back in the blue zone. So, how long can the dollar keep going up and up and up, before we're literally just going to start going like straight up vertical at some point, right? How long can it really hold this parabola? I don't know, but I would think that at some point it is going to break, and the Fed is going to have to change their stance. Now, let's super quick talk about the connection between Bitcoin and stocks. Again, I want to go over what was happening, okay, especially Walmart. Walmart, if you guys saw, fell 9.5% because they said that higher prices for food and fuel are prompting consumers to cut back, and it's had to cut prices at its stores to reduce excess inventory. Other retail stocks fell as well. Amazon, 5%, Target, 2.5%, Home Depot fell as well. So why is this happening? Well, it's happening because people are scared about what is going to be coming out. So the Coinbase is on here too because they're insider trading. That fell 5.2%. You also have General Motors fell 3.7%. But, nevertheless, why is this happening? Well, obviously, we have the second quarter GDP data due out Thursday. We also have the Fed, again, raising most likely 75 to 100 Wednesday as well. And should inflation stay high, if we keep getting these high inflation prints, well, then what are they going to do? They're going to keep raising rates. They're going to keep putting the pressure on the markets. They're going to keep making it more difficult. And, by raising it to make it to borrow money, which means no one's going to want to borrow the money, and then no one can afford, these prices. And it's just pretty terrible, right? It sounds like a terrible thing. But guys, Treasury Secretary Janet Yellen says we just don't have conditions consistent with a recession. Oh, so it's not a recession. So even though we think that these GDP readings are going to come in bad, right? Rule of thumb, it's not a recession. Well, here it is, guys. This is what I got to talk about. So this is from the official whitehouse.gov. Just came out. I didn't even know this actually came out 5 days ago. I just saw this today. How do economists determine whether the economy is in a recession? Again, guys, whitehouse.gov. I'm sorry. The official White House websites. This is an official document. Scroll down here. I'm not going to go into all this. They go into all the detail. But look at this first paragraph. Look at this. What is a recession? While some maintain that 2 consecutive quarters of falling real GDP constitutes a recession, I think we can all agree it does, that is neither the official definition nor the way economists evaluate the state of the business cycle. Instead, both official determinations of recessions and economists' assessment of economic activities are based on a holistic look at the data. Oh, we have to take a holistic look at the data. Okay, including the labor market, consumer and business spending, industrial production, and income. Based on this data, it is unlikely that the decline in the GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter, indicates a recession. So what does this mean? It means they're changing the rules. They're changing the rules because they know that we're going to get bad data. They know that we're going to officially be in a recession. So they come out with this article on the official White House website to say, oh no, but you know what? We're going to change the definition. We're going to change the terms. Usually that's a recession. But you know, this time you got to consider the labor market, consumer and business spending, industrial production, incomes, and all these other factors. Oh, okay. So what are we doing? We're kicking the can down the road a little bit farther, right? We're changing the rules of the game. This is ridiculous. Just like they got rid of, remember they had the money supply they were showing on the Fred website, F-R-E-D. They took that down, right? Why? Well, I don't know. I guess we don't need to see that data anymore because it was too embarrassing for them. So I think this is, it's not hilarious. It's actually kind of sad, really. But they say, oh, the numbers don't lie. So this is a bit of a paraphrase over at Crypto Slate. So over the first 3 months of 2020, the total output of the American economy has shrunk at a rate of 1.6%. But don't worry, it's not a recession, guys, according to the experts. Now, they're saying it might spike 0.4% in Q2 when they release the new data. Okay, great. But the overall trajectory is still down, right? Janet Yellen came out. She noted at the press event that she had about America's growth. She says it has been extremely weak over the past few months. Consumer spending has been on the rise alongside a strong labor market. So according to her, this is not an economy that is in a recession, but we're in a period of transition. Oh, right there. It's transitory. Remember, guys, it's transitory in which growth is slowing, and that's necessary and appropriate. Recession is broad-based weakness in the economy. We're not seeing that now. No, we're not seeing that, guys. We're not seeing that, even though, cases of, the COVID situation is back up again. And yes, I mean, granted, gas prices have come down. That's good, right? But I don't know. You talk to people, my friends aren't really spending right now from what I can tell. Crypto's down 70%. Stocks like Netflix down 70%. Even big namer guys like Walmart and Apple and Target are falling. The earnings reports are coming out. They're saying they're not good. So I don't know where Yellen's getting all this data from. But yeah, what do you guys think about the fact that the White House is like, well, this usually is the definition of a recession. But you know what, though? Not really. We're going to just change it because we don't want to be in a recession, right? Because, we want to look like we're the heroes here. So I just thought that was crazy, guys. So yeah, there you go. That's what's happening in our government today. So let's talk about what Mike McClone says. Now, he talks about Bitcoin might be regaining its propensity to outperform the second half of this year. He says the long commodity unwind copper's fastest decline since 2008 and bonds futures recovering from their steepest dip versus its 50-week average since 1987, which there was a stock crash then, all coming amid an aggressive Federal Reserve could be the situation. But they say right here, markets this cold can just take a small spark. And it's actually funny because Zynga down here mentioned a small spark being a small position may be public by the Saudi Arabian sovereign funds, or one of them. Now, we've spoke about this for a while, and we've seen their interest in the metaverse, and we've seen their interest in crypto. And if you look at what's going on right now, even though, yes, it's not as big as it was, it's actually fallen since last year, venture capital's interest, it's still up more than double since 2 years ago. according to CoinShares Weekly Digest, asset flow reported around 30 million last week alone. So it is down a little bit, but it still brings the monthly total to around 394 million, which does show that you are still having investors interested in the space. European investors actually dominated the action for the period due to the fact that there's so much bearish sentiment in the US because of everything we've been speaking about, right? But I don't want to end on all bad news because it's not all bad news. We're living through rough times, but tough times never last, right? Tough times make tough people, right? Senator Patrick Toomey and Christian Sinema have introduced a new bill to the U.S. to exclude small crypto transactions from capital gain tax requirements. The bill would apply to transactions worth less than $50 with a provision to adjust that benchmark alongside inflation. Similar bills putting the benchmark around 200 have been introduced to Congress in the past. So this is obviously good. They're looking to not tax, if let's say the Lightning Network does become something that does become, adopted in the next 10 years or so. So when you do decide to actually go buy your cup of coffee with Bitcoin, if you want to do that, I don't know why you'd want to do that. I'd rather use dirty cash for that. But if you want to use your Bitcoin, no capital gains. I think that's cool. So that's where we're going to end today's video, guys. Ultimately, the 200 weekly is very important. Still minor capitulation here. It would be nice if we can close one of these weeks above 22,786. But really, if you go back here, in my opinion, the most important level is the monthly. Because, we can close the weekly at any time. But, to close the monthly, you have to go through an entire month instead of just, a week. So since we only have a few days left of the month, me right now, my eyes are on $21,577. Obviously, that average is going to move a little over the week, but basically $21,500. That's where we need to be by the end of this month. If we can do that, then I would say never with 100% certainty, but with like 85% certainty, maybe 90%, that the bottom is definitely in. If we continue to get, pushed down by these moving averages and we continue to miss the mark, then no, then the trend is still going down. And the trend is your friend until the end, even if you don't like the trend, okay? So that's it for me today, guys. Thank you for coming back to the channel. Remember, if you do want to go trade, I highly recommend Bybit. Lots of these copy traders have been killing it over there. If you want to follow them, you can. There are still some spaces available. And if you want the $6,888 bonus, make sure you use the specific link below. That's just for Crypto Zombie subscribers only. So take advantage of that. It's absolutely free. You can trade with it. You can do whatever you want with it. You can make real gains off of it. So that is that. And if you do want to learn how to trade, make sure that you watch these videos popping up right here, right now, and be on the lookout for my updated BitGet video, which should be coming out in the next couple days. So thank you so much for coming back. You guys rock. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. Busy week ahead. We're going to be paying attention. Of course, guys, I love you. Until next time, peace out.